You're listening to Well Within 10, a bite-sized approach to working on your wellness. 10 minutes of wellness thought leadership from experts across the country, hosted by me, founder Stevie Gable Carr. Today we're chatting with Kelly Solar, Managing Director, and Andrea Ernst, Senior Portfolio Manager at Fifth Third Private Bank. Hello, ladies. Thank you for coming on the podcast.
Hi, Stevie.
Hi, how are you?
Hi. So what are we going to be chatting about today?
So we feel like there is tons of political and economic uncertainty in our country and the world. We hear about it in the news. I think we feel it in our wallets. And so we want to talk at a high level about what's going on, what should we be paying attention to, and what are some of the levers that are being pulled.
Well, very excited to dive into this episode. This episode is powered by Fifth Third Private Bank, bringing them more than 160 years of experience as trusted advisors to high net worth and ultra high net worth individuals and families. With over $36 billion in managed assets and named one of the top 40 wealth management firms in the US by Barron's and one of the world's best private banks by Global Finance. So let's go ahead and dive in. There's so much uncertainty, and as we know, the only thing that is constant is change. So why don't you guys share a little bit about, what's going on, what you're seeing with your clients, and how you're kind of managing all of this uncertainty happening right now?
Yeah, absolutely. You're right. There is so much going on right now. We have inflation at the highest levels it's been in 40 years. We have global supply chain issues. We have worker shortages. Obviously, the lingering effects of COVID, the war in Ukraine, and we're still trying to navigate and figure out kind of what the Fed is even doing at this moment to combat all of this and mostly that inflation piece. And one thing that I'm seeing with my clients right now is when they're reading kind of the big headline news, they feel like they need to be making big changes in their portfolios too. And that's just not the case right now. Really what we should be doing amongst all of this uncertainty is just taking a step back, taking a deep breath, and just returning back to the basics.
So Andrea, what would you say to a client that's super nervous right now? Is there something that they can do, some practical piece of advice that could perhaps calm them or give them a tactic to make sense of all of this?
Yeah, absolutely. Well, first I would say, really take the emotion out of your money. And that's really hard to do. I mean, we've seen and we understand all the blood, sweat, and tears that goes into building our wealth. And I get it. This is money that we know is going to be used for retirement or maybe to put our kids through college. But ultimately, what you need to remember is, well, we have emotions, the markets don't. So the markets do a really good job of just taking what's put in front of them, looking at it through an objective lens, digesting it, processing it, and finding a way through it. So for clients who are really emotional right now, before you make any changes, I think a good step is to, again, take that step back. And before you place any trigger on placing a trade, saying, has anything changed in my financial situation that would warrant a change in my portfolio? Or really, am I making these changes because I'm nervous and concerned right now?
Yeah. So maybe having a perspective of check in with my goals.
Absolutely.
Check in with my values.
Absolutely.
Am I still trying to get to the same place I was a year ago or 6 months ago, and making sure that what I'm doing with my money is still going to get me there, rather than reacting to what is uncontrollable in the market, react to what you can control, which is, where do you want to end up in 5 years, 7 years, 10 years?
That's exactly it. I think a really good basic to go back to is just understanding your money and what it's going to be used for. So kind of separate, maybe put them in some buckets, your money in buckets. So if you have short-term money, so say you're going to be buying a car or house within the next 12 to maybe even 18 months, reduce that risk, right? I mean, that's just basic financial strategy. But we've been so spoiled with the market recently that we've been comfortable leaving our short-term assets exposed because we've just seen the account values go up and up and up. So again, go back to the basics and reduce your risk on money that you see using in the short term. And I'm not talking about your emergency fund that's set aside for a different need, but money that you know you're going to be using, again, within 12 to 18 months. On the flip side, for your long-term bucket, so like your 401k, your retirement assets, take a look at how you're allocated. again, maybe it's time to just rebalance. Nothing new, a simple concept, but because we have been so spoiled with the markets, we tend to forget to practice those simple, foundations of investing.
Right.
When we see all the growth that we've been attaining in our portfolios. So again, I think a simple way to view this is, say you started out when you made your elections in your 401k, let's say, you said, I'm comfortable putting 70% of my money exposed to the market. Well, with all of that growth right now, you might be sitting at 74% or 75%. So just take some time, rebalance, reset, get back to the basics. Very simple, easy ways to help your financial picture.
I love that so much, that idea of just having this awareness, right? There's the uncertainty. You can't control things, externally, but what you can really do is understanding where you are currently, and knowing is half the battle. And then being able to say, okay, foundationally, like we do, our annual checkup with our physician, or we should be at least, and how can we make sure that maybe this is the opportunity to dive in, even if it feels scary or something that we're nervous about the outcome. It probably is better to just have that level of understanding now, so that way, if you do need to make some adjustments, not big sweeping ones, but maybe just some minor ones, because the chances of your long-term goals, or your short-term goals and long-term goals being that much different versus 6 months ago it's probably not that different, right? Yeah.
Absolutely. And you bring up a really good point. When we rebalance, we don't want to make major changes. Market timing never works. You have to get 2 points right. Not only do you have to know when to sell, but you have to know when to buy back in. And again, if you are making these changes based off of emotions, odds are the market is going to do something completely opposite, because the market is just looking at it kind of black and white, numbers, figures, and how do we get through this? So
yeah,
I'm glad you brought that up.
Yeah. And in the last couple of minutes, I do have questions. People are like, okay, when is all of this uncertainty going to stop? And I know we don't have a crystal ball, but we know that there's some things being put into place to kind of help to alleviate some of this, right?
Right. I think there are some things that we keep an eye on.
Mm-hmm.
There are some levers that can be pulled and that we should pay attention to. So, I know that you're talking to a lot of your clients about what are you watching today? What are you looking at in the near term to help your clients have good decision making and have all of the information?
Yeah, absolutely. And, I think one of the things that we're watching closely right now is the Fed, and all eyes have been on the Fed for quite some time. It was at first with COVID, they stepped in a huge way and supported the economy. By pumping money into the credit markets and again, lowering interest rates. But now they're at the point where inflation is just running so high. And actually, it's again, the highest level in over 40 years. 8.5% from last year. And so, for our clients right now, they're feeling it everywhere. You're feeling it at the gas station, you're feeling it at the grocery store, and
at the hairdresser you mentioned.
Yes, my hairdresser, I got the email that it's up 15%. So what I think is really important for us to understand is how, again, we got here. And it was started as soon as the opening of the economy again with COVID. Everybody wanted to get back out there. We put pressure on our resources. Now we have supply chain issues that's impacting inflation, and even worker shortages. In fact, right now there's 11 million jobs open and only 6 million people that are there to fill it. So no matter what, we have a 5 million worker shortage.
Right.
And so companies, what they're doing are actively going in there and giving people amazing pay raises and really good starting wages, which is wonderful. We want that. But in the long run, companies are going to feel pressure on their margins, and then they're going to need to increase their prices too. So we wrap all that up in a bow, and it's just the perfect storm for inflation. And those prices aren't going to be reduced anytime soon. But what we are seeing is the Fed stepping up in a really big way. Their May meeting, we're anticipating a 50 basis point rate hike. And as the Fed increases interest rates, it's going to start to slow down, the economy and the pressure that we put on our resources, and will hopefully level things out. It may not happen overnight. Again, the market may take some time to digest all of this information, but the market does a wonderful job of working through uncertainty.
Yeah. And I think that the last final thing as we wrap up is I think that knowing that there is uncertainty, what can you do, during this time to bring a little bit more control is just getting back to that self-awareness, right? And you'd mentioned, understanding your cash flow, whether this is a good thing or a bad thing, right?
Yeah, absolutely. With inflation, especially, even if it's simple as just taking a pen and paper and writing what your inflows are, what are your outflows. If you're someone who's seeing inflation and it's impacting your daily life to the point where you're trying to worry about paying your mortgage or filling your car up, maybe you're going to realize that there is, a piece that you can eliminate, a different way to reroute kind of your money. And on the flip side, if you're someone who, you kind of hear it in the news, but you're still going out and you're spending your money and it's not impacting you, still keeping track of your cash flows is going to be a great way to say, hey, maybe I have some extra cash on hand. Maybe I can add more money to the 529 account or increase my 401k contribution a percentage or two. Cash flow is key, and it's really important to know where your money, your ins and outs of your money are going.
Right.
I love that. Well, thank you so much for being here today. And both of you have just provided an incredible amount of insight, making a topic like inflation and what's going on with the global economy a little more digestible. So I really appreciate the time. If you're interested in learning more about Fifth Third Private Bank, you can check out their website that we'll put here in our notes, or you can check out wisewellnessskill.com/Fifth Third Private Bank to learn more about Of Note, a wealth network for women. Thank you for listening to the podcast. Have a great day. You've been listening to Well Within 10, a bite-sized approach to working on your wellness. You can find more episodes wherever you get your podcasts.